For a long time, Tesla has been dominant in the electric vehicle sector. At some point in the United States, they were the only ones manufacturing electric vehicles. Although the idea has long been suggested in Hollywood movies, Tesla was the first to make a breakthrough in autonomous driving. This is why Cathie Wood, a longtime bullish Tesla investor, believes that Tesla is unstoppable, and she drops a huge bomb that affirms it. There are now new players in the electric vehicle sector, and internal combustion engine vehicle manufacturers are going electric as more people switch to electric vehicles. Some of them plan on taking Tesla's top dog spot. Why is Tesla unstoppable? How does it affect Tesla's stock predictions? Well, we'll find out shortly. Cathie Wood recently stated that Tesla has more corner cases to train their algorithms on than any other firm. This means that other companies will not be able to catch up because Tesla now has over 1 million robots running about gathering data and reporting it back, including her own Model 3. Every day, people say Tesla will acquire 25% of the electric vehicle market in 5 years. However, Cathie Wood now claims that people are beginning to believe that Tesla will capture 25% of the total vehicle market in 5 years, and that electric vehicles will account for nearly half of all cars sold. When asked if Tesla is an outlier that will defy all previous numbers compared to other United States companies in terms of growth opportunity and how big it will be, Cathie Woods replied by saying that Tesla will be the most significant growth opportunity that has ever been seen before in the stock market. Cathie Wood recently appeared in an interview in which she dropped a couple of huge bombshells regarding Tesla. ARK Invest understands how dominating they are and believes it will be more about Tesla's insurmountable advantage when it comes to autonomy. Cathie Wood also says that overall, Tesla's revenue growth has been compounded at about 48% per year when Tesla was suffering a lot of criticism. Tesla had revenues of $31.536 billion in 2020. So let's see what a 50% growth rate on their income would look like over the next 10 years. Let's look at a revenue growth rate of 60% per annum compounded over the next 10 years, which would be 2022 through 2031, which will be about $3 trillion of revenue in only a decade. If you're wondering how one can get such an obscene amount of income for Tesla in 2031, don't worry. It's just simple arithmetic. So, for example, if one takes a few tweaks to their Tesla robotaxi assumptions, then the miles driven on average per robotaxi very quickly get to this type of revenue number while using fairly conservative Tesla robotaxi estimates. However, in ARK's case, they are a little more generous with their bull case for Tesla stock. This is how you get to well over $3 trillion of revenue in just a decade. ARK Invest will be making a significant update to their Tesla 5-year price target reasonably soon. Their assumptions now keep becoming more and more bullish, and Tesla is gaining market share among others, so it's just a matter of time. As a result, according to Cathie Wood, customers should be advised that there will be a significant rise in price goals. 4 barriers to entry appear to have shifted in Tesla's favor. The first is battery technology. Tesla is the only car manufacturer, except for a couple of companies in China, that has decided to ride the cost curve of the consumer electronics industry by using batteries found in laptops and cell phones. Cathie also claims that automakers and analysts scoffed when Tesla decided to apply battery technology. These assertions by Cathie Wood on Tesla battery technology may be traced back to 2013. This was when savvy automotive expert Gordon Johnson stated that Tesla stock is overpriced based on their Panasonic laptop batteries, prompting him to sell his investment. Tesla stock went public around $30 per share, and it has increased about 300 times since then. Cathie suggests that people sold Tesla stock back at $30 per share because there were well-publicized battery blowups on airplanes, there was a burning of the battery, and the cost of the battery pack system is much lower than the cost of other automakers. As a result, if these other firms want to compete with Tesla, they must invest heavily in electric vehicles when gas-powered vehicle sales are declining. This is an important and underappreciated observation from Cathie Wood. If legacy automakers want to compete with Tesla, they will suffer significant losses on the electric vehicles they sell. If they're going to get close to the same pricing point, they will have to invest tens of billions of dollars and suffer catastrophic losses. This will result in sales of their internal combustion engine vehicles collapsing, not only because they're selling fewer vehicles, but also because they're producing fewer vehicles. Internal combustion engine vehicles would become less profitable over time while losing colossal amounts of money trying to compete with Tesla and its price. Cathie Wood believes that the alternative will be less power or less range. However, we may see various permutations around that the battery is still 3 to 4 years ahead in terms of cost fall of other automakers that elected to employ lithium-ion pouch technology instead of the cylindrical batteries that Tesla uses. Cathie Wood believes the second barrier to entry, which is also the most important in value and growth, is that Tesla is the only automaker to have created its semiconductor. Tesla is following Apple's playbook, which can be traced back to when Apple was the upstart and Nokia, Motorola, and Ericsson were the winners in the cell phone space. Apple was this upstart that believed that Apple was not just a phone, but would become a computer. Still, the other companies did not have their chip on their vision, and even today, when Apple's market share has fallen to 12, it still takes the majority of profits from the global smartphone market. According to Cathie, the artificial intelligence chip is so important because of autonomous travel, and it's the only one done by Apple. People also believe the other barrier to entry is the number of miles of real-world driving data that Tesla has accumulated. They now have more corner cases to train their systems on with their expertise than any other company. These firms will be unable to catch up since Tesla already has over 1 million robots gathering data and reporting it back every day. As a result, Tesla's data lead is impregnable. It is a done deal, and no one is catching up to Tesla. For example, suppose they are an electric vehicle manufacturer. In that case, the so-called competition must learn how to manufacture a completely different technology from scratch, which they do not have any expertise in doing today. New startups must endure the hardship, even though they have no manufacturing experience. As a result, ARK Invest believes that Tesla will take 25% of the total vehicle market by 2025. The earlier research conducted by Wood's company predicted that Tesla's market share in electric vehicles would decline as more and more electric cars were brought into the market. To ARK's surprise, Tesla's proportion of worldwide electric car sales is either stable or increasing, giving them the confidence to be even more positive on ARK's flagship product. On the other hand, GM had a fall in sales to 44,697 units in the third quarter of 2021, a decrease of 218,195 units from the same period the previous year. Even while Tesla sales continue to grow quarter after quarter, they blame it on interruptions in the semiconductor supply chain. Keep in mind that electric vehicles require 10 times the amount of chips needed by internal combustion engine vehicles, even though Tesla's sales increase every quarter, proving that buyers want them. GM is now marketing the incorrect product. Volkswagen and Toyota are the world's two most significant automobile manufacturers. Each has several brands under a large umbrella and produces around 10 million vehicles each year on average. Therefore, if Wood is accurate, Tesla will overtake the whole market share currently held by the German and Japanese behemoths in the next several years. Even though Wood's forecast is exciting for Tesla supporters and investors, Tesla's declared goal is to build 20 million vehicles per year by 2030, according to the company. Unquestionably, Tesla is a significant player in the automobile industry. Tesla's influence likely influenced several legacy vehicle makers to examine electrification as a possible source of development and innovation to their business models and strategies. One of the reasons is to save money on gasoline, which is now at an all-time high due to rising oil costs. ARK Invest also predicts that electric cars would account for roughly half of all new vehicles sold by 2020. The future is amazing for Tesla, and 2022 is a crucial and critical year for the company, probably their most vital. Where do you see Tesla in the next 5 years? Comment down below.